Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Ken Sheppard. Thanks for being on the show, Ken.
You're welcome. Welcome to you as well.
Yeah, thank you. And I just from getting to talk to you a little bit, I know you're going to bring a lot of value to these listeners, and you have lots of expertise and experience that we need to learn from. So I appreciate your time and being willing to share. But a little about Ken. He's been in creative financing business where the core asset is generally real estate, entertainment, communication of any kind, energy, sports, tax credit, or other asset component. Created a strategic partnership where he can act as a principal note receiver of debt cash flow with a $1 million fund. Asset in funding the entire capital stack and structure strategic partnerships. So through a licensed escrow title party, provided a soft proof of funds for up to $500 million. I hope I said that right. $500 million, Ken. So, Ken,
Yeah, you did.
Thank you so much again. And I'd love to hear a little more about your story. I know the listeners would like to get to know you a little bit if they haven't heard of you before. And then Let's dive in.
Good. So the fund is actually $100 million, I think, that you mentioned before, and the $500 million proof of funds. We did do that. We did it as soft proof of funds through a lawyer, not a bank statement. We found that lawyers' letters mean as much as any bank statement for the purpose of giving people capital, evidence, and comfort. I've been involved in finance since the early 70s. I started in the entertainment industry, William Morris, CBS, Fox, Warner Brothers. Eventually got into producing, executive producing, and then where I really hit our stride was buying distribution contracts, which act kind of like purchase orders, and funding those, producing those, and then turning them into the studio and getting the monies back. And we did really well with that. And then in the early 90s, we shifted into commercial mortgage-backed securities with folks that are like some of the biggest hedge funds and firms on Wall Street. Put a bunch of capital together for them and started trading on their brand as well as ours through syndications. We still do that to this day. We had to restructure quite a bit of that in the early 2000s due to the market change. And then we started doing a lot of stuff in entertainment again that was structured, securitized, like a loan against a deferred compensation for an NBA basketball player and things like that. We closed close to $200 million in deals that's on our website. I think there's $180 million up there and a lot in process that's, into the $500 million area or more. That's just moving through our machinery. And we do things throughout the capital stack, as you said, debt, equity, mezzanine, structured financings, loans, partnerships, whatever makes sense to help four things happen: create jobs, feed families, fund companies, create family legacy. Out of all those things comes revenue. I think if you think revenue first, it's not as a productive way to look at life.
Wow. No, that's very interesting. You've had an amazing career, a long career in this business. I'm looking forward to this conversation. I know just before the show, we were talking about just the ability to raise equity or find capital. And you had some unique ways of doing that. Just you started sharing, and it's impressive. And you were elaborating on how debt is not as challenging if we have the capital. And so I'd love for you to elaborate on that, and then let us dive into some of your techniques in doing that.
Well, the biggest hole in the industry seems to be the equity. People come to us all the time. They say, we have the debt. We want you to do the equity. We're only going to do the equity if we do the debt. I'm not going to be the equity guy and let them have the easy piece. Doesn't make sense. You're handing a check for how many ever millions to a broker for a deal that you raised the equity for that drove their debt. So we want to do the debt, or at least as long as we're, equal to or better than what's on the table, which we always are, because we know the marketplace pretty well after doing it this many years and have a lot of relationships all over the place, specifically in the family office space, high net worth, people like that. I always try and come up with ways that other people don't think of to locate things. Capital is found where wealthy people go, right? And so I've made it a when I was younger, I made it a practice of going to the more expensive golf courses that I could find, making friends with the bartender, if I could get in, if it wasn't membership driven, and then having them tell me who's doing what, why, when, and where, and say, look, if I put something together, can I pay you a referral fee? And of course they say yes. And then as long as it's legal, which it generally is, as long as they can clear it. And we've done a number of deals through that mechanism of meeting people through other people. Networking is, I think, really important. So golf courses, high-end golf courses as best you can get, high-end conferences about real estate investment, things of that nature that occur all over this country. You can certainly find conferences in any area of the country throughout the year. I think networking on the internet, using LinkedIn and places like that, is really powerful. And then we have our radio show, which drives a lot of traffic back to us, which is about making money in real estate when you have no money. And I'll talk about more about that when you're open to hearing more.
Yeah, no, we're always open to hearing more about that. But a little about what you said there, capital, finding capital where wealthy people go. And you mentioned even before we talked, like just going, if there's a conference there that maybe you're not even a part of, but you're sitting there at the bar, you're sitting there, and we were talking about how if you're dressed the part and you know how to talk some of the talk, people will listen.
That's
Or
right.
striking up that conversation and starting that networking, starting that relationship,
Right.
right there, and being where these people are. Can
Right.
you want to elaborate on that, and then we'll move on to your other point.
Of course. So, one of the things I do instill to this day when I have the time is go to conferences and look for the people with the badges that are at those conferences that are directly tied into what we do in real estate and investment finance. I think you do have to look the part. Most of those people are very nicely dressed in suits or, for the gals, in dresses and things like that. And, but I just think you have to present well. I mean, this is an environment like going to a high level conference. And I think if you don't have the right kind of clothes, find somebody that does, that can lend to you for an hour, put them on, go sit down there and just sit at the bar. You can order a soda for a couple of dollars. You can order a water even sometimes, and just strike up a conversation with people that are sitting at the bar, say, or something about them, like if you like the color of their shirt, whatever it might be, something to break the ice. I think that's a really good way to start. And remember, like I said to you before, the most important thing is capital is looking for the places to go way more than people that are looking for capital. What I'm saying, let me say it a different way. The people looking for the capital, there's not anywhere near as many of them as there are the people that are looking to place the capital. Capital is in the trillions. You just have to find it. And if you hit the criteria of what they want to do, they write the checks.
That's a great point that, like, I wish every listener would just think about for a minute what Ken just said, that it's in the trillions and there's a lot more capital and more people with capital looking for places to invest it and put it than people that are looking for it. So, because I hear all the time, I get calls every weekend, numerous times, of how do we get started raising capital? How do we meet those investors? How does that, how do we get started doing that? It seems so difficult, in the very beginning, but it's awesome to hear that statement you just made.
Sure. Thank you.
And so all right, so moving forward, get us started and what you just mentioned a minute ago.
Well, we're talking about when you go to these kinds of places, right? Just dress the part. Like if you're going to a golf course, you don't have to wear a suit. You can just dress in a polo shirt and slacks. If you're going to a conference and everybody's dressed in a suit and tie, which most of the time they're going to be because they're lawyers and accountants and investment bankers and people from Wall Street and such like that, they're going to be dressed the way I'm dressed now, right? And you're going to find that if you dress that way, they'll respond to you. And like I said, you can always find something easy to break the ice on, the color of somebody's shirt, the color of a lady's dress, something that's simple that kind of gets them saying, oh, wow, that's interesting that I have people that come up to me sometimes and just, when I'm sitting at a place and I'm at a conference and I'm on the other side, I've had people come up to me and say, that's a really nice this or really nice that, or whatever. And I know you from somebody else. Always make sure you have plenty of business cards as well. I think those are really important. They can be the little ones. You can put a package together for 500 of them for like $10 or something.
I know some people that are listening are saying, well, Ken, I don't have any experience. And so I'm a little bit nervous about getting into that conversation. I mean, I remember when I first started having some of those conversations, like, you're wondering, what are we going to talk about when they say, well, tell me about the deals you've done, if they haven't done one yet. What do you advise when someone's getting started, just in some of those first conversations and they're a little nervous about, getting that question about, well, tell me about your track record, or tell me, whatever you've done, but they haven't really done a large deal yet or syndicated a deal anyway.
Sure. So there's lots and lots of people that have already done that if you go to them and you speak to them and say, look, I'm going to be going here and there and otherwise, would you like to be a part of that package? Then all of a sudden you've got brand with you. You can do that at lots of investment banks, lots of Wall Street firms, smaller firms as well. So when you go into these environments, you say, I have relationships with people that are part of my investment group, right? Because you can have that in a very a very loose term. Investment. I have people that I'm working on that have done a lot of business. Happy to introduce you to them if you'd like me to. Of course, you want an NC-dated non-circumvention, non-disclosure agreement to do that, which is really simple to do. But it's a very easy thing to do, as you know. But you want to do that if you're going to put them together, because you want to protect the fact that you're going to get compensated if you put them together, because you got two very sophisticated people and you're not so sophisticated. You might find yourself in not such a great position in that, and you might be unhappy. So in order to avoid that, you do the NC&D, non-disclosure agreement. You do it always with the people who are receiving the capital, okay? So if nobody's receiving the capital in this situation, I would try and get it from the company that you're bringing to the party that wants to be a part of the brand that you're building.
Okay.
And I've done that, and I've done that a lot.
Yeah, well, maybe you could talk about the branding a little bit, or what that should look like when we're trying to raise capital, or can you speak to that, to the branding side
sure.
of the business?
Brand is always about recognition and value, and that comes from just people knowing who you are. Getting on platforms like LinkedIn, where we're tied in with like 19,000 different people now, it doesn't mean you're going to do business with all of them. But if your name keeps appearing all over the LinkedIn, people are going to say, who's this guy on LinkedIn? And then they may come and look at your LinkedIn, and then they would give you a message that they want to talk to you. I think that's much more appropriate than reaching out to people that you don't know on LinkedIn and trying to build those relationships, because I just haven't found that to be productive. But the other way, where you brand yourself, is really important. I think that's all about what's your name of your company. Your vision statement is really important. What you're planning, like I say, create jobs, feed families, fund companies, create family legacy in order to create revenue and wealth. That rings true with everybody at every layer of society, from the highest to the not so high, everywhere in the world, because that's the whole thing that we're all trying to do, is to help each other do better.
So yes, so like the LinkedIn, you were telling us about LinkedIn. So you're saying it's better to, like, say we're connected to those people and them just seeing us every day than obviously them reaching out to us,
right?
And starting the conversation, as opposed to us reaching out and making that first attempt.
Right. Like there's a lot of places where you can send messages to people that you don't know, but I don't recommend that unless you really have some sort of tie to them some way. I would say just get yourself set up on LinkedIn, put down what your credentials are. If you can tie in with a company like I spoke to about earlier, put their credentials down on your page as your colleagues. They're not necessarily your partners, they're just your colleagues. And that would give you that much more branding than you have yourself. It's just building the team.
What other places have you maybe gone to, or where you've, found investors that maybe we haven't thought of? Maybe I know we like the golf clubs, the country clubs, things like that, or those high-end hotels. Any other places that maybe we haven't thought of that you've been successful over the years to meet these people?
Yacht clubs.
Yacht clubs
is one, and they're pretty much everywhere. Cool. Even if they have winter, they have yacht clubs all over the country and the world. Just places where wealthy people go that they have a tendency to be using as a place to unwind. That would be something I would say for sure.
Well, what's been the hardest part of the capital raising process for you over the years, or maybe if you could go back,
Sure.
many years ago to even currently?
Yeah. Well, obviously the hardest part of the process is breaking the ice and going forward, right? So maybe you start with a small deal. I tell people all the time, you know, could you do a hotel as your first deal? Yeah. Is it going to take you a long time? Yeah. Are you better off learning the process with maybe a small single family home that you buy for, that's worth, I don't know, 100 fixed up, and you can buy for 40, takes 10 to fix it up, and now you have 50,000 in equity. You do that 10 times, you have a $500,000 in net equity. And I think that that's really a good place to start. The investors who are doing the fix and flip investing like us, which we do, all the investing all the stuff we're talking about, we do ourselves, or we have partners to do it with us, just like I was saying before. We run a pretty substantial fund and all that kind of good stuff. But it's more important, I think, when you're starting out, the people that will be funding you will understand that you're starting out. They don't mind the fact that you're starting out. When you try and go do a $10 million, $20, $30, $50 million deal initially, more than likely somebody's going to see that you're not that experienced, and you're going to get challenged on that as to what are you trying to do. If you don't have the capital and you don't have the experience and you don't have the know-how, why are we here, right? Now, maybe you have a deal that makes sense that is just way under market or something, but I think that's highly unlikely to find as a new person. I believe as a new person, you start where the new people start, which is buying a house very inexpensively, fixing it up, making sure you stay at less than 60% of the after repaired value, including purchase price and repairs. If you do that, you will have a 40% margin. You can always sell the contract. You can always flip the house. You can keep it, rent it, refinance it, all kinds of stuff like that. And then eventually you move into the 2-unit, 4-unit, 8-unit, 50-unit, hotel, whatever. But it's the same process no matter what the size of the deal. So why not start where it's simple and where people will embrace you, because they don't mind that you're doing something early in your career, because they're used to working with people early in their career.
I like the statement that you made, and I may modify it a little bit, and you can correct me if I'm wrong, but it was like, people don't mind if you're just starting out. But it's like, as long as the deal you're presenting matches your experience.
Exactly. And when you go to people for capital, like when you're going to somebody for fix and flip funding, make sure you either own the property, or somebody with you owns the property, or you have a contract to purchase the property with the seller. Reason I say that, one-page form for a contract to purchase with a seller. I just wrote an offer the other day for $750,000 on a building worth $2 million. I took 5 minutes to write on a letter of intent on my computer. It was, and I sent it over, and they submitted it because it was written the right way. But even when you're doing a single family, you can do it on a one-page form. Same form, whether I'm buying something for $100 million or $100,000, same form. But the point is, you want to have it under contract, or you own it. And the reason for that is that if you don't have that and you go out and get the financing and you can't get the property, you've spun your wheels and you'll be disappointed. You won't be able to close. Maybe the seller changed their mind or whatever. And the lender won't be happy at all because you didn't have the ability to finish what you started with them. So always make sure you have the things in process, contract or ownership, before you make a move. Make sure you're at 60% or less in value, and 60% or less, including repairs and purchase price against the after repaired value. So you always have that margin, and you should be able to get started. I've seen people get started that were 15.
So Ken, how do you prepare for this potential downturn everybody's talking about?
Well, we always operate in a much better in a downturn economy than an upside economy, because there's a lot more opportunity to buy. There's always going to be people that want to sell, much more in that kind of economy. You'll get better discounts, and there will always be people that need a place to live, need to buy a business, need to move into an apartment, whatever. Those will always continue. Businesses will always thrive at some point. Some won't, some will, but for us, it's actually better when the economy is upside down. When it's right side up and all the appreciation happens, we still sit on the assets. I don't believe a lot. I used to flip a lot of stuff, and I still do sometimes, but I really believe in the buy and hold process, because that's how you build wealth, not by flipping property. Flipping property pays your bills, but then you're on a hamster wheel. You're constantly having to do one after the other after the other. When you find something that's large enough, or even a single family house that you can keep for a rental, it's income every month, as long as you manage it properly.
When you say buy and hold, do you mean like 20 years or for a lifetime, or is 5
Lifetime.
years buy and hold? Lifetime.
Lifetime and into the next lifetimes, because there's only so much real estate that's going to continue to go up in value. The United States is one of the most, if not the most attractive place in the world to live. People are coming here from all over the world. They're pushing the prices up in a lot of different reasons, for a lot of different reasons. But at the end of the day, you know that if you buy something, it's not easy to find. People say, oh, I can find 50 deals and 100 deals, 50. Maybe you can. To me, and I've been doing this a long time, like 40 years or so, I don't think it's that easy to find the right kind of a deal. I think you have to look and write and write. You have to write offers on all kinds of things at ridiculously low prices. And if people don't respond, don't worry about it. Move on to the next one. If they do respond, then you have a conversation with them. Even if they don't respond now, they may respond back in 6 months.
Somehow you knew what I was fixing to ask you, but I was going to ask, how are you increasing deal flow? And if you want to elaborate any more on that.
Well, we have a team of people that we've given instructions as to the kind of things we want to buy. We have a VA team in the Philippines that writes a lot of offers for us on things we feed them to write offers on. It's all a one-page form. It takes 5 minutes to write. It literally takes 5 minutes to write, and it takes a click of your email mouse once you scan it into your computer or put it into your computer some way to send it. The technology today is so much better than it was when I started. I started when there were faxes and there was pagers that you wear on that had nothing but a phone number. I came from the early 70s into the 80s working on this stuff, and then into the technology we have today, which is so much more powerful. And you can reach people all over the world. There's also some platforms, like DealStream is a platform we use. Again, free. You can post up there. You can post anything you want. They clear it, of course, but you can post anything you want with no charge. I always look for things that don't want a fee from you. If you want to pay something to upgrade, you have that right. But why not have something that's initially no cost to get started with it? So I like DealStream, and I like LinkedIn, and those are the two that we have a tendency to link. There are a number of others, but a lot of them are membership driven, and you can't do anything and even post to those sites unless you pay a fee. With DealStream, you have to pay a fee to contact a lot of the sellers. Not always, but you can post without a cost because they need that for the people that are looking for the deals that are on DealStream, as an example.
How many offers is this team writing, say, on a weekly or monthly basis?
We probably write 200 to 300 offers a week.
Oh, wow. So
because you don't know what's going to happen, and build your network, and then people may call you. They may not call you about that deal, but they'll call you about another deal. And like I said, when people come to me and say, I want you to write on this 18-page form, I say, look, let me send you this one-page letter of intent. Take it to your client. If your client likes it, we'll write up a long form. But let's not waste time on a long form unless we know there's interest from your client in the first place.
And how do you, I know some people are wondering, how do you train somebody in the Philippines to write offers? How do you trust them enough to do that?
Well, first of all, they're all subject to any and all conditions precedent that we need as a buyer, which gives us a complete out. So no matter what they write, we can't have a problem. We have a 30-day minimum contingency period on large deals. We have a 15-day contingency period on smaller deals. So there's always time to work something out. And if it doesn't work, you can get out for any reason at all. And I've seen people, and I have put up deposits that are not cash. We put up shoes, put up an inventory of shoes once. We put up a promissory note. We've done a lot of things because as long as you put up anything of consideration, $1 or anything of consideration, it's a contract. If you don't put up anything of consideration, it's not valid as a contract. But so we've taught the people that we're working with on our virtual assistant team that's what they do. These are PhDs that are $3 an hour, okay? And we have 4 of them. And so they work like about 80 hours a week together. And of those, we tell them, try and write at least 5 to 10 offers a day each. So if you multiply it out, you're into the hundreds.
Wow. So what's a way that you've recently improved your business, Ken, that we could apply to ours?
Well, I think just refining our techniques. to the point where it's almost like rolls off, your tongue because you've been doing it so much. If you repeat something enough times and you do it with the right kind of knowledge base, okay, it eventually will become part of your walking, talking culture, and you'll start to speak that way all the time, and people will be aware of you and they will respond to you. Like when we call somebody we don't know and we're starting to build a contact base with them, like if I'm calling a hedge fund manager, I might have been referred to him by a law firm, or maybe I was referred to him by LinkedIn or something. The first thing we always say is, what we've done. We've closed 200 million in deals. We've done proofs of funds for over 500, up to 500 million already in soft. Soft meaning from our lawyer, not a bank statement. We have a lot of stuff in the pipeline. Those are the kind of things you start with. But I always initially start with something that's not on topic. Like if I'm calling somebody I don't know, I say, thanks for taking my call. How's the weather where you are? Something just to break the ice again. And they go, oh, it's so cold here. I say, well, maybe you want to go to Maui. And then they laugh, and you know what I mean? And it just kind of gets things started. And that's what I've found that works. And I think it works really well, especially when people are coming to you, and they will come to you from DealStream and they will come to you from LinkedIn.
Nice. So, what's your best advice for caring for investors so they want to return?
Always treat them with the respect that you would treat yourself. Make sure you give them good reporting. Make sure you're honest with them. Don't try and cut corners with them. Because if you make a successful investor one time and you pay them back, they'll come back again. They'll say, let's do this again, because they already had made money with you. I think that's really important. Ethics is at the top of the list.
And what's the number one thing that's contributed to your success?
I think the way we treat people. We're known for doing what we say and saying what we do. And, I think that's really important. I don't think you should ever yell at anybody. I think I always tell people, pretend you're in church. Because if you do that, you're not going to yell and scream, probably, right?
We hope not.
And you're not going to swear, probably. So I just tell people, just pretend you're in church, And if you do that and you talk at this pace and you don't try and run people over with your words and or with what your knowledge base is, they'll see what your knowledge base is pretty quick. Does that help?
Yes, I couldn't agree more. Couldn't agree more. No, and I appreciate you explaining about that one thing, and it goes back to that networking and meeting people and treating people and investors and everybody like you want to be treated.
Right.
But before we have to go, Ken, tell the listeners how you like to give back.
How I like to give back, did you say?
Yes.
Like, in other words, well, we certainly give back to our church family. Mm-hmm. We do some volunteer work with around Christmas time and the holidays, certainly. We're big believers in fighting for people's rights that are, that don't have as much as we have. And, because there's always going to be people over you and always going to be people not as well off as you, no matter where you are on the totem pole. Unless you're like one of the top billionaires in the world, you're always going to have some people that are up above you and down underneath you in terms of their wealth. But that doesn't mean that they're any different in terms of their personality and who they are. We treat people, no matter at what level we meet them, all the same.
And tell people how they can get in touch with you.
So we have our website, which is, LinkedIn, of course, with Creative Flips Inc. on LinkedIn under my name. That's a good one. We always answer our messages, or if we don't answer them personally, they're answered by the VA group out of the Philippines. You can send an email to us, to our corporate email address, and just put referencing the show at F as in Frank, C as in Charlie, I as in India, and then the @ symbol PACBEL, short for Pacific Bell, PACBELL.net. You can visit our website, which is more a landing page than anything else, showing our accomplishments, which is Creative Flips, one word, creative, FLIPS, .webs, plural, on webs and flips.com. You can also listen to our radio show. I put 248 half hours together of radio called Making Money in Real Estate When You Have No Money, so people have a place to go to get the education and don't have to pay for it. These classes that they charge $20,000, $30,000, $40,000 for, They end up with the education, but they never buy property because they can't take the money out to buy property because they bought the education. I believe in giving the education away and letting people then help their families and such like that. So we did 248 half hours. I produced, wrote, and posted the entire series. We have guests on there. We have lots of things we talk about, most every topic that you can think of that would be coming up, unless you're like doing $500 million deals, for smaller deals and for people getting started and stuff. It's a fantastic platform. I'm proud of it. And it prevents us from having to repeat ourselves in the education process, because we just tell people, go to the website.
Thank you for listening to the Real Estate Syndication Show, brought to you by Life Bridge Capital. Life Bridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. Life Bridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.